Welcome back. We've been chatting to Nazeer Hoosen, Executive Director of PPS, Short-Term Insurance, and Themba Baloyi, Executive Director of Discovery Insure. We're looking at short-term insurance and where it's going. One of the words that came up, as I said, going into that break, is innovation. In your opinion, Nazeer, where have we come from? Give us a brief overview of where the industry's come from.
Yeah, generally I think what has happened is over the years and going back a decade or two, you had your typical traditional insurers who dominated the market, and there were probably about 4 or 5 of them, in fact probably more than that initially, and then they consolidated, and out of those emerged about 3 or 4 real dominant players who had 80 to 90% of the market, and they just managed that to the extent of the profitability they wanted. With the emergence of new companies in the marketplace, new players that came in, the direct insurers, etc., put a lot of pressure on the market, and it made everyone start thinking about how to run their businesses better and finding more innovative ways of doing things. And you'll find over the last couple of years that the pricing models that are starting to emerge in the market have become so much more technical and directly associated to the individual risk of each individual, rather than a bulk risk rate that comes out. So if you went out and bought insurance today, and Themba did the same thing, both similar type of individuals in this country, you'd come up with very different insurance premium rates because of your profile. So where you live, how old you are, what your profession is, how many accidents you've had historically, what type of vehicle you drive, the home you live in, how many children you've got, etc., etc. All of those are built in to come up with a rate specific to you personally.
But I mean, I look at some of the newer players that have come into the market who've sort of eaten away at the big insurers, and they've all come in with specific types of products and different angles. If you look at the sort of outsurances, and I think a perfect example would be First for Women, who targets only women. Your product, Discovery Insure, the driving aspect of it is a classic example of how people are starting to eat into the market by taking little chunks away from it. Would you agree with me there?
Yeah, I think that's the value of innovation. I mean, going back to the point made about direct players, when they came into the market, before 1995, you wouldn't be able to buy a policy over the telephone. You had to go to the office, meet with your broker, or meet with someone that is selling on behalf of that company. Now, with the availability of telephones and the opportunities that the likes of Dial Direct and Auto in general identified earlier on, it created a shift where people could say, you know, I can phone and get covered. Then it moved on to the out bonuses of the world that you're talking about with the arrival of outsurance. And if you look at the innovation aspect to it, it's always been direct players coming into the market, focusing more on the customer. But if you carefully look at the product, it's about distribution in the majority. Now, and then you look back.
What do you mean by distribution?
So it's about how to access the customer.
Okay.
Instead of just going the traditional existing structures such as the broker community. The new players were focusing more on the distribution channels. And then you had the move towards the MyWays that came in recently, and then Discovery Insure, which was more about benefits, product benefits to the customer, where you're saying this is no longer about just offering you a mechanism to access us quickly. This is more now about giving you a product value proposition on the table that is looking beyond just the moment when you start claiming. So if you look at the Discovery Insure rewards as an example, your fuel cashback, it is about something that matters to you as a motorist. The petrol price just went up. We all know what has happened. We all know that the consumer is pressed in every aspect. So how do you make someone's life a bit easier? And how do you solve an underlying problem in this country, which is the rate of accidents is incredibly high. I mean, our stats show that if you compare us to our BRICS counterparts, we're the highest in terms of road fatalities. Is there something we can do as a country to resolve that problem? So that was the innovation. It was not just about the product, getting the product to the customer. It was about understanding the whole ecosystem and saying, is there something we can do as a business, commercially viable, and solve the problem that the country is facing?
Do you think the big businesses, the big short-term insurers, just got a bit too fat cat and just too lazy and didn't see this coming? Didn't see the small innovative players coming into the market and taking a fair amount of their market share away?
There's certainly an element of that. There's no doubt about it. I mean, any organization in the world today, if it has a degree of monopoly of an industry, it does become a bit complacent. And that certainly happened in this country.
In your case, innovation, when you're talking about working with graduate professionals, are they open to innovation, or are they a bit more sticky? Because I would imagine you're talking about people who are maybe in their 30s, maybe 40s, whereas Themba may be talking about people who are in their early 20s, and they're grabbing a younger audience there, a younger demographic.
Oh, without a doubt. I mean, any professional in the country today, if he wants to keep up with his own profession, has got to embrace technology and what is happening. So you'll find that even your 60-year-old professional today is well versed with technology. He's got his own iPad. He knows how to access the internet. He knows what he needs to do from that perspective. So professionals do keep up, and especially from a professional perspective, is now with them requiring CPD points to keep abreast with current trends in the industry. They have to do that to keep abreast of what's going on. So professionals are reasonably well attuned to what's happening out there.
Okay, why is it then that in the vast majority of the South African market, 66% of the respondents to a recent survey said they had no short-term insurance and didn't even intend to get any, but the majority of them had funeral policies? Why are we not breaking out of the traditional funeral policy and stokvel? Okay, let me put it another way. Why aren't you guys getting into that market? Is there a sense of distrust?
I'll tell you, it's true that the numbers are not something you would have expected. But what you need to appreciate is that there is also a legislative component. In other countries, like in the UK, Australia, and other countries that we monitor very closely, it is legislated that as long as you've got a vehicle, the US is also another example. If you've got a vehicle, it's got to be insured. In our country, somehow we don't have that legislation in place. And I do know that the Treasury, National Treasury, is working on that together with the FSB. There's been work that they've been reviewing to ensure that there's legislation in place that if you've got a vehicle, you've got to be insured. Now, what you need to appreciate also in terms of your second question, which says, why aren't we entering into that market? Truthfully speaking, is that we are looking at products that will be suitable for those markets, particularly on the lower end, but it's much harder if it's not legislated, when someone could just decide and said, listen, it's by choice, I don't want to do this, I don't want to have cover. In the majority, the people that have got financed vehicles, most of them are covered because the bank will say, no, I'm not giving you the finance unless you are insured. So there is a transitioning of the market that I think we should expect over the years. But the truth is the opportunity is big. South Africa has got more than 10 million vehicles on our roads. And if only about 33% is covered, then we've got a problem.
Where do you think this is going? Where's short-term insurance going? Is this going to remain one of those innovative industries that will eventually change? The whole thing will swing around and we'll see a different landscape.
We're certainly heading in that direction from what we're seeing right now. And importantly, if we can tap into that mass of 10 million that we're talking about, it will have an enormous impact on the industry itself. Imagine the premium growth that would come from that into this industry. It'll allow the companies within the industry to become a lot more flexible, a lot more innovative in how they approach it. If you take PPS today, as a young professional or as a young student heading towards your qualification, you can take out a policy for 25 Rand with PPS. That doesn't exist anymore in any other company today for pure life cover. And why we're able to do that is because we have got the graduate market that we are covering, and we've got a fair amount of them under our company's cover. So we can afford to do that with that marketplace. Now, if we could do that with the entire country,
you're talking of a different ball game.
You're talking about differently, completely differently, and your risk would certainly. It'll go through a transition. It'll probably become higher initially,
but then you
should drop thereafter.
You would be spreading it, though.
You're spreading it,
yeah.
Absolutely.
I mean, if you look at the telematics technology, which is the tracking units that we talked about, it shows that more and more vehicles, particularly in South Africa, due to the unfortunate crime scenario, most vehicles have got tracking devices, and those devices are becoming more intelligent. They're beginning to collect more data. There's an understanding of how you're driving. So that is also another trigger point that's going to drive innovation. And we also see innovation coming in all sorts of directions in the form of new entrants into the market. The new entrants into the market, they're saying, hang on, there's an opportunity to turn the game around here completely, as opposed to operating in the same structures and the same product ethos that has been in place for all along. And I think, therefore, the opportunity is vast, but I just want to emphasize one more point to say insurance should not be seen just as a garage purchase. We spoke about that earlier on. Insurance should be seen as an opportunity to secure your hard-earned assets, which, if anything, God forbid, were to happen, you don't want to start from scratch. You don't want to start from ground zero without anything at all. So assuming that, hopefully it never happens, that someone's house catches fire and is wiped out completely, if you don't have cover, you've got a scenario where you become desperate. All the hard work, all the years of accumulated assets gone in a split second. So the industry has to grow to create that understanding and the awareness and the education that the consumer needs to say this is not just a one-way street. This is about us as consumers as well, benefiting by covering and making sure that we are adequately covered.
Nazeer, one piece of advice for anybody watching the show and looking at short-term insurance, what should they be looking for?
Absolutely what Themba said is ensure that your hard-earned assets that you have accumulated over the years is covered. And that's what insurance companies are there for. And it's a pooling of risk in order to ensure that you cover whatever you've worked so hard for.